So it's not a big surprise. I think the market has been quite challenging this year. I think we're all looking forward to the next couple of years of trying to sort of reinvigorate the market, I guess, if you like. The overall volume transacted isn't a surprise coming down. What is an issue, of course, is the amount of stored up volume coming to the market. I think we all need to do a lot more to try and stimulate demand, and probably in a much more convened and organised way as part of the market. It's definitely not about price. I think the price at the moment is very close to the bottom of what the market can really bear. We have to remember that the voluntary market exists to stimulate finance into projects, and there is a cost of abatement, and we are very close to, if not below, that cost of abatement for clean cook stoves already. I think the issue with clean cook stove projects as a whole, and we're obviously a developer of clean cook stove projects, is that the projects have always been developed as based on their uniqueness and their stories, etc. And now we're seeing a lot more volume coming to the market, and they're becoming a sort of almost like an insurance level, a base level, more ubiquitous. So I think in that situation, people then are comparing them price-wise against renewables and that type of thing, which obviously isn't apples for apples, but it is. It just means that they can't really be used as a base load of volume. Look, I think we absolutely have to draw out much more about the health impacts, and not as co-benefits of carbon. I think we really need to look at the separate outputs from the projects. Carbon and climate is one. Avoidance of respiratory disease is another. Positive gender impacts around getting more girls in school, that type of thing, is another. And all of the other sort of community-based impacts, stimulating new markets, those types of things. And we have to really look at pulling those out as separate outputs from the projects and saying, okay, where are people prepared to put finance in to receive these outputs now? And some may be public sector, some may be private sector. So we're going to have to be looking at a lot more blended finance flows into these projects, and not just relying on carbon credits with co-benefits. It very much needs to be about, we have a carbon output, and separately to that we have a health output, an education output, a gender output, that type of thing. Look, we are very much focused on Africa, and LDCs in general, but Africa has always been, or some of the LDCs in Africa have always been a real focus for us, and we will continue to do that. We have a specialism there, and a natural, we obviously have offices there, so that will be our focus. In terms of on the demand side, I think that we have to look much more broadly than the traditional markets in Europe that we have looked for. We will be pushing more towards the United States and talking to a lot more corporates over there, but also really engaging much more in the voluntary market with the different government sectors as well. Look, I think we have to be much more focused on engaging corporates and delivering to them what they need, listening to them. If the product that we're offering here in terms of a carbon credit is not something that they want to spend a lot of time or focusing on, or they don't particularly want to include it per se just as a carbon credit in their carbon management, then we need to talk to them and understand, listen, we know that you want to take full responsibility or take more responsibility for your impacts, be they carbon, water, whatever it is. We know you want to fund direct action on the ground that is measured and verified. So let's talk about what you do want to see. And that may mean that the market becomes even more opaque for a little while, and actually what we're developing and what we're bringing out are not just carbon credits. But I think that's absolutely what we have to do, because we don't want to see another year or another 2 years like that. Yeah, I think that's exactly it. You know, what a lot of project developers don't really understand is that the larger corporates, which is where we need to stimulate demand, they don't want one single project, or they don't want 3 projects of the same type in one geographic area. They will want to buy a portfolio of projects or support a portfolio of projects that has direct relevance to their business, to their supply chain, to where they manufacture, to where they sell. And you know, working with strong, you know, if you call it, I mean, we're a project developer and an offset retailer, but working with partners who, you know, provide those services and provide the construction of those services to corporates is very important. You know, and the other thing is be very realistic about your price expectations prior to just dropping your price, because you know what we see a lot of people is holding out and holding out and holding out for €5 a ton, and then actually saying, oh, we've reached a cash flow issue, so we're going to just dump it straight into the market at €2 a ton, and that does not work for anyone.